I would like to now introduce today's presenters. Achint Arora is a partner and a member of the pricing assurance team and assists clients on topics related to price, solution, and contract benchmarking. He has domain expertise in applications and engineering services and co-leads our work in the software licensing space. Amanpreet Machanda is a practice director on the pricing assurance team. He advises clients on inquiries and initiatives related to price benchmarking, contract assessment, and solution design associated with IT application and digital services. Nishant Udupa is a practice director on the engineering services team, leading the engineering and R&D, ER&D practice at Everest Group. He advises clients on topics related to ER&D spending, technology adoption, and global sourcing across engineering verticals. And with that, I'd like to turn things over to Achint.
Thank you, Evelyn. Hey, all. Glad to be connected today. So today we'll be talking about engineering services, what's happening in that market, and the commercial and solution tenets around what's happening in that space as well. Because as we understand, a lot of the market understand how IT services is playing out, how BPO services is playing out, but engineering services among all is the least explored, least understood, but also the highest potential area as per what we understand of the market, and that's a clear gap on the buyer side, on the service provider side as well, to kind of decode, to kind of understand. What we will do is we'll first of all talk about the agenda, what we are going to cover in the next 55, 60 odd minutes. So on the next page, we talk about the agenda and what are we planning to cover today. The first one is how has the engineering services market performed in 2023, going to the our reflection, our understanding, how it performed, and then what were the key points, what were the strength points, what were the strong areas, what all themes resonated with the clients. We'll also talk about the enterprise objectives, commercial trends during this session, how the pricing has been moving, and what are we seeing in that space. And lastly, during this session, we'll talk about the future. We'll talk about what we are forecasting in terms of growth for the engineering services market, and how can service providers be ready for it and prepare for a market that at this point in time seems to be a bit more. And when I'm saying market, it's the overall macroeconomics are still not that promising, but within that, engineering services is still a silver lining, right? So now let's start with the first of all definition of engineering services, right? I mean, the next page talks about the definition as in how we understand this space, and I'll have Nishant, you comment on given the fact that engineering services as a concept is not that well understood as BPO or IT services. Can you shine some light onto how we define, how we interpret the space?
And hello to everyone who's joined us and listening to us. So here at Everest Group, when we say engineering services, we are essentially talking about two broad segments of the technology sourcing market, right? The first one is product engineering, which includes any services that are rendered by a provider in the development of commercial products. Right? So by commercial products, what we mean is any offering by an enterprise or an OEM that is being developed with the intent of selling that offering in the market. So these commercial products could be software in nature. As an example, the Zoom platform we are currently using, or Microsoft Teams. Right? These are offerings developed by the respective enterprises, and they're selling these products in the market. Right? Similarly, the products could be physical products, and there could be a lot of hardware, mechanical, or embedded systems engineering going on within these products. Right? So think of an automobile, an aircraft, a semiconductor chip, or even a smartphone. Right? All of these fit into our definition of commercial products. The other big bucket which we include within engineering services is the whole engineering manufacturing continuum. Right? So you've developed a product, how do you now take that to market? And that is something that gets covered under manufacturing engineering. Now, when we talk about engineering, its relevance, of course, extends across industries, right? So enterprises are in business to essentially sell their products and make money. and that makes this space relevant to multiple industries, right? And our coverage too therefore spans all the industries, some of which have been listed on this slide. Of course, this is by no means an exhaustive list.
All right, great. And Nishant, I would like to add, given the fact that engineering services itself is a very distinct market compared to how IT and BPO, given the maturity of different firms, different service providers, how they are played out in this like that, there are overlaps, right? I mean, think like software product engineering services and application services, which will have overlapped in terms of skills. But the fact, on the pricing side, we do see still a very distinct strategy when it comes to pricing for those services, because ultimately in application, you are helping build application to support the mid, back, and the front of the operation, while in SPES, you are basically, helping the client build product that they can monetize themselves, right? So a very interesting space to be in. All right. Any additional point you would like to share, on the coverage from an activity standpoint? And I think the next page can relate to that.
Yeah, I think if we move on to the next page, the one additional point I would say is, I spoke about engineering services or product engineering involving the development of products, but this space spans the entire value chain, right? So right from product design, which is all about UI, UX ideation, roadmap definition, gathering requirements, etc., to product development, which is of course important, to verification and validation, which is all about testing, certification, and then of course the end of life product support, sustenance, maintenance, and so on, right? Similarly, on the manufacturing front as well, we have both the very traditional operational technology aspects. So think about your MES platforms, the SCADA, PLC systems. To what we are observing is a major shift in the market, right? Which is the technology-led optimization of shop floor operations, which everyone is calling that Industry 4.0 today, and that's of course also leading to a lot of convergence and integration between IT and OT systems. I think that's a fairly comprehensive definition that we've shared. Let's maybe move ahead.
Yeah, great, right? And Nishant, let's talk about the market, because the next page is all about market. It talks about the state of the market, how much the growth has been. So let's move on to the next page, and there we'll talk about the market. And what's your color again? How the performance is, and then I'll share some of my perspective, based on the broader IT BPO sector. Yeah.
Sure. Yeah. So first of all, I think it's a huge addressable market, right? So if you look at the numbers on the left, the column chart there essentially points to global enterprise spending on engineering and R&D, right? This is of course global, cuts across verticals, right? So enterprises are essentially spending $1.45 trillion on engineering and R&D. This is of course, as of 2023. It's been a fairly consistent market as well. We've seen this number grow at anywhere between 4 to 6% year on year for the past, decade or so, right? Now, when we look at outsourcing though, that's where the market is slightly different to IT and BPO, right? Outsourcing has been, let me say, historically on the lower side, right? So we estimate somewhere between 5 to 6% is what gets outsourced to providers. And of course, an additional similar number goes to offshore centers of enterprises as well. I'd say there are multiple reasons for this. Given that we're talking about products, that is something that's core to enterprises. They don't want to expose a lot of their IP to service providers. So there's a lot of reluctance, or historically there has been reluctance in outsourcing some of this work to third parties. But I think this is changing, especially as technology and digital and software gets integrated into products. Enterprises are realizing that they'll have to change their traditional ways of working, right? They'll have to almost become software developers. And that is where, the talent that service providers bring in becomes really useful for them. The other thing I'd say is, especially in the current environment, outsourcing is also an important lever to cut costs. And that's also, acting as one of the big growth drivers for this industry. So all of this, yeah, go on.
Yeah. No, I mean, this is amazing color, amazing commentary, reason being that if I just reflect and resonate on, the IT BPO services sector growth that we have seen last year, and that was close to hardly 2%, right? Which means that this is clearly the shining light in the armory of many of those service providers who are targeting growth. And we do see a clear potential in terms of outsourcing, in terms of buyer spending, where it can be, And given the fact that only 5% of this being outsourced, and that also kind of trickles down to the level of offshoring, clearly a lot of enterprises can save a lot of bucks, if they are willing to offshore a lot more, if they are willing to outsource a lot more. So clearly a market with a lot of potential. So Nishant, I mean, is it not the best year for engineering services market?
What I'll do is I'll give you the market sizes on this side, right? We spoke about some of the growth drivers. The market is a fairly sizable one. It's around $78 billion. And if you look at the historical numbers, it's been growing in, double digits, right? 2023 was not the best year for the market, given that, there was a lot of uncertainty because of recessionary headwinds, broader geopolitical conflicts, supply chain constraints impacting the manufacturing industry, and so on and so forth. But if we move on to the next slide now, what you'll see is essentially, what we've done here is, if we go on to the next page up, what we've done here is essentially a comparison of growth rates reported by leading service providers across a number of markets. I think we need to go back to the previous one. Right, so we have the consulting firms, the likes of Accenture or IBM Consulting, the infra heritage firms, the IT providers, and the engineering services firms as well. So both the software product engineering firms, the likes of, let's say, an Endava or a Globant or a Persistent, and they are represented by the green line. And there are firms which operate more in the asset heavy world, right? So the likes of an Alten, a Cyient, LTTS, and they are represented by the orange line. Right, so what's interesting is, despite the fact that engineering services grew at only around 7% in 2023, the market still outperformed the broader IT and BPO services markets, right? So Achin, going back to your question, if you're growing at 7% in a bad year, that's still a great place to be, right? You're definitely operating in the right market.
Absolutely, that makes a lot of sense. All right, and if we look at the growth again, both for asset heavy and asset light companies, segments, it has been growing really well, and compared to the consulting or the infra or the application heritage vendors, So what exactly is driving this growth?
Yeah, so growth is not being driven by just one or two segments, but by a number of horizontal themes that are cutting across verticals. And we've captured some of those on the next slide, right? So I'll maybe start off with the first one, which is software-defined everything or software-defined products, right? This is something that we are observing across verticals, where there is a transition towards smart, connected products. Consumers want greater customization, more personalization, and enterprises are therefore investing in technologies like IoT and AI/ML, analytics, etc. All of this is leading to greater outsourcing. Similarly, in the software product world, there is more platformization, modernization. Everything is being built on platforms today. And in fact, what's interesting is outsourcing is taking place not just around platform engineering, but also around platform operations and platform management, right? Not what you would consider traditional work streams. Generative AI, I don't think I need to speak about this at length. This is the talk of the town today. Both enterprises and providers alike are investing to figure out use cases, applications. We see a lot of POCs, pilot projects being done where people are exploring ways and trying to integrate generative AI in their processes, right? Digital manufacturing, again, one of the key growth drivers that we saw in 2023. What I would say is there's been a slight shift in demand in this market, right? There has been an impact on the large scale, really transformational projects because of the slowdown. But a lot of projects where enterprises can realize quick wins, they see ROI within, let's say, 6 months or a year. Those kind of projects are being signed, right? So anything that can cut costs immediately, anything that can result in greater transparency or visibility, those kind of deals are really being favored by enterprises. Sustainability then is, there's a lot of momentum here across not just the very traditional and low-hanging fruit of sustainability reporting and compliance, but also use cases like energy monitoring or emissions tracking or waste reduction, which is more on the manufacturing side. And similarly, on the product side as well, there's a clear transition towards EVs that we are seeing, towards renewable energy. So all of these factors are playing out. And then finally, private networks, right? I think in what was a slow year for the telecom industry, private networks was perhaps one segment that performed a little bit better. It still wasn't the greatest year, but it still outperformed the rest of the telecom market. So what I'd say, as I conclude this slide is, we've called out these 6 themes as growth drivers for 2023. But I think, I would fully expect most of these themes, in fact, all of these themes to remain relevant, not just in 2024, but the next few years as well.
Okay, very interesting. Clearly segments for growth, clearly segments that can be invested in, and certainly, we are seeing a lot of action. I think now we are on the poll time. Let's talk about from our audience today. What are your perspective on the engineering services outsourcing growth? Again, we have talked about it. Do you think, given the year that we are in, are we going to be better out of the woods? Or, is it going to be same as 2023? Do we still think some time for recovery, or not sure? All right, time for sharing the results. Okay, I'm just seeing the poll. The poll results, Nishant, is like almost 63% of the members are saying, that the growth rates will be similar, which is within the plus minus 2% of 2023. So within that 6.5 to 7%. And then, almost 15% are saying out of the woods, and almost 15% are still saying we are still some time away, and 8% are not sure. So 63% saying similar growth.
Yeah, that's an interesting set of results, right, Achint? I think I'm not sure whether people actually expect growth rates to be similar, or they just don't want to put their neck out there, right, and commit to the fact that the market will perform much better or much worse. But we do. I think what I'll do is I'll prolong the suspense a little bit longer. Right? We will share our forecast for the year for 2024 and beyond, but let's get to that in a few slides.
Okay. Fair enough. Okay, so we are at the end of section 1, and now we'll talk about the next section, where we'll cover some of the things around enterprise objectives, what the priorities are looking like, and some of the recent commercial trends. So I think on the next page, here we talk about what are the key enterprises challenges, what are the mandates looking like, and where do we think the market will go, right? So on this one, one of the recent studies that we did on the key issues that the buyers are facing, within the engineering services space, particularly, the cost and margin pressure is now a top priority. If you think about 2023, and I'll go back to IT services, cost and margin pressure was still a number one priority in 2023, even in IT and BPO services. But engineering seems to have changed gears, and now it's the number one priority even in this space, right? So which kind of resonates with the fact that it has been a last difficult almost 1.5 to 2 years for the market. Starting late 2022, we saw the sentiment going negative, and we are still in that space, and it doesn't seem like we are gonna get out of it very soon. At least our assumption hypothesis is that it's gonna be the same kind of a market at least till third quarter of 2024, if not even if it doesn't even extend further, right? Of course, the geopolitical risks have added, right? The whole geopolitical situation previously, the Russia-Ukraine thing, and now the Israel-Palestine thing, it's kind of putting a lot of buyers into, making them nervous, a lot of service providers nervous. We are seeing increased competition. Unlike IT, where there are different set of providers, but it's still a very concentrated market. Within engineering, we do see a lot of boutique players coming in, And that's the beauty of this market, that we are seeing many boutique firms, regional firms actually giving tough competition to bigger providers in this space, right? And then there are other things like adapting to new models, talent always a concern. But then again, the rankings keep on changing year on year, right? So interesting space, but we still believe that cost mandates are going to be there. Engineering services is where, Nishant, correct me if I'm mistaken, but the deals are not that big right now compared to
Yeah.
what we see in IT services, right? But do
Yep.
you expect that to go up, the size of the deal itself? And are we seeing evidence of that happening?
Yeah. So I think if we actually go to the next uh, I think if we go to the next slide, I think what's happening is on the deals front, we don't really see a lot of change in terms of deal sizes, at least on the immediate front, right? But you spoke about cost optimization and margin pressure. I think this cost optimization focus is actually manifesting itself in three ways, right? So enterprises are exploring reshoring. So there's a lot more nearshoring and offshoring that's taking place. We are seeing a lot of vendor consolidation, vendor rebalancing initiatives that are getting kickstarted. Of course, a lot of this happened in 2023, but we expect some of this to continue as well. And there are implications on the pricing front as well, right? So lots of changes when it comes to contract renegotiation, lock-in pricing, and so on and so forth. Right? So let's maybe look at each of these one by one, starting with reshoring. If we move to the next slide. So on reshoring, what we clearly see, and just sharing some data from one of the recent survey that we carried out with enterprises, we clearly see an enterprise preference to increase their leverage of offshore and nearshore locations, right? So the growth in offshore is, I think, fairly obvious, given the economic environment that we are in. Enterprises are looking at offshoring as a lever to reduce costs and B, also to tap into the large talent pool that is available in some of these locations, let's say in India, right? But I think what's more interesting is what's happening on the nearshore front, right? So growth in nearshore is actually being driven by considerations around some of the niche skills or emerging skills that are actually present in some of these locations, right? So if you think about locations like Eastern Europe or Latin America or North Africa or even Eastern Asia, right? These are locations that are now picking up. Language is considered to be less of a barrier as compared to offshore locations. Time zones are similar, and that's very relevant and critical when we are delivering engineering services, right? So I think some of these factors have started to play out. In fact, Aman, can you talk about a little bit more about which are some of the sub segments where we are seeing this preference for offshoring?
Sure. So, if we move on to the next slide, right? So primarily, we see, different offshoring maturity levels by engineering services segments, right? So, if you look at the three segments, industrial manufacturing operations, software and platform engineering, and, the third one, which is the products and systems engineering, what we see is that the offshoring in products and systems engineering is observed to be the highest among all the segments. Now, there are multiple reasons to it, right? Primarily, there is a lot of user of commoditized skill sets, such as mechanical engineering, FPGA design, right? So these are traditional skill sets for which talent is readily available, and providers would often offshore such projects, right? Moreover, there is a higher utilization of dedicated testing laboratories at offshore for product qualification and compliance testing, right? So because of these two reasons, we see relatively higher offshore for these kind of segments, right? On the contrary, right, in deals pertaining to industrial and manufacturing operations, there's a higher usage of on-site consultants to understand the factory layouts and facilitate more client interactions. So also, I mean, there's also a key focus on onshore driven engineering advisory in projects related to smart factory setup, industry 4.0, autonomous robots, etc., to support strategy and design. It also helps in playing an instrumental role in planning change management strategies to facilitate successful implementations, right? So that's how we see in terms of industrial manufacturing operations. If we were to talk about software and platform engineering, we see a higher proportion of time dedicated to design phase, in this, right? So as compared to products and systems engineering, right? Going forward, what we expect is, there would be greater offshoring in deals pertaining to the first two segments, driven by increased cost pressures and improved service provider focus. Okay. Nishant, do you want to cover the next next slide?
Yeah, let's move to the next slide. So we looked at reshoring, offshoring, nearshoring. The second factor, that's playing out is, there's been increased momentum around vendor consolidation and rebalancing. Right? Again, sharing some data from our polls, and what we essentially are learning is 79% of enterprises are saying that they'll either make significant changes to their provider mix in 2024, or at the very least rebalance work across providers. And there are clear cost and efficiency reasons for this, right? Enterprises want to consolidate work amongst a fewer set of vendors that brings down their costs. They may not want to manage multiple vendor relationships, and this of course then results in efficiencies as well, right? So as I said, we did see a lot of vendor consolidation play out in 2023. But vendor rebalancing is an interesting one, and this is actually playing out in multiple ways, right? So we are seeing, for example, some work which is being shifted to offshore locations, but not being outsourced, right? So a lot of new captive centers or GICs or GECs being set up. So enterprises are open to offshoring, but are still retaining some of the work in-house, right? And then similarly on the outsourcing front or on the provider front as well, there's a clear preference for vendors who, let's say, don't churn resources too often, who retain resources within the same engagement, because that helps build domain expertise. And in fact, even on the pricing front, right, there is a lot of reliance on vendors who are willing to put their skin in the game, right? Who are, willing to engage in risk reward, outcome-based, output-based pricing models and so on, right? But let me not steal the thunder from my pricing colleagues, right? Aman, why don't I invite you here to share more details on what's happening on the pricing front?
Yeah. So if we look at the past 6 to 7 months, right, we have observed muted price increases for engineering services skills. There has been a lot of focus on cost optimization, and providers have not been able to negotiate a substantial rate increase because of the same. So for example, for traditional software and platform engineering skills such as .NET, Java, C++, the price change has been in the range of minus 0.2 to 0.8%, right? In fact, I think we're still not on that slide, right? But I think we can move on to that one. I think, can we move on to the next slide?
Yeah.
All right, I'll start from the top, right? So primarily, we have observed muted price increases for engineering services skills in the past 7 to 8 months. So there has been a lot of focus on cost optimization, and providers have not been able to negotiate a substantial rate increase, right? So if you look at the first segment, which is the traditional software and platform engineering, skills such as .NET, C++, which are the traditional skills, the price change actually has been in the range of minus 0.2 to 0.8%, right? Whereas for specialized skills such as DevOps, cloud, it has been slightly higher, but it is still very muted, right? Which is in the range of 0.6 to 1.5%. Similarly, we have observed muted price changes for traditional product and systems engineering skills. For industrial manufacturing operation skills, we have observed literally better price change as compared to the other two segments, with the range to be 0 to 1.5% for traditional skills such as Oracle, EBS, Enterprise Asset Management, SCADA, whereas for specialized skills, it is in the range of 0.7 to 2%. So clearly, pricing has been under pressure, and there hasn't been a lot of change that has happened, right? So that's what the story is. We'll talk about the forecast, and we'll cover that in the next in few slides. But I think it's now time for a poll.
So Aman, if I just look at this, it's still muted in spite of the high growth of the market. Again, the price change that we have seen, it's slightly better than classical IT, both apps and infra included, but it's still very much in the similar range. Is that a fair understanding?
That's a fair understanding, Achin, right? So primarily the market sentiment has been quite muted, right? There have been fears of recession, that has basically led to, uncertainties in the market. while it's still better than the traditional IT and BPO, but it has remained muted.
All right. Okay, let's go to the poll. I think this is the second poll we have in place, and you know, again, to the audience that are participating today, which direction do you see the enterprise momentum? And I'll specify the word pricing momentum to move in 2024, right? It's not the pricing, it's the pricing momentum. Higher than 2023, same as 2023, lower or not sure. And yeah, the poll is open. Going by history, I won't bias, but I mean, it should be interesting to see, right? I mean, how the
Yeah.
audience think the pricing momentum would go. All right, we have the polls out. People are saying, most of them, 47% are saying same as 2023. And some are saying higher than 2023, the pricing momentum to be better, given the fact that the engineering services market is still showing some sort of growth. At least, Aman, if I read correctly, 74% are saying either same or higher pricing momentum, right? So
Yeah.
does that mean, is it a more positive sentiment than what we were
Correct.
anticipating? Or how do you read that?
I think yes. Clearly, we see a positive sentiment on the market, right, in terms of the growth, and we also believe that the market is going to rebound in the second or the later half of this year, right? So we would also concur with this. So we clearly see that the pricing is going to increase going forward, especially for engineering services, right? Because this is a niche market, and we would concur with these results as well.
Awesome.
So, Achin, do you want to cover, how can, service providers prepare for the shift going forward?
Absolutely. I'll not a service provider. I would talk about, buyers,
Yeah.
right here, because it's in it for buyers, for the enterprises themselves. If you think about the market, right, and I'll talk about it in the next slide. And our commentary is very simple on the next page. We are talking about locking in pricing, right? That's what the enterprises, the buyers should be doing. And why are we saying that? First of all, let's go back to 2023. And Aman, you already talked about the market changing. That was minimal, the price increases that we saw, right? I mean, enterprises were able to negotiate their COLA waiver clauses if they were. They were able to negotiate for the price increases, right? They were able to kind of, even in on the consolidation part, they were able to get synergies driven in, they were able to get cost savings driven in. All of that is happening, and it's happening across the board in IT, BPO, in engineering as well. What we know as a fact is we are anticipating a better growth market this year, in spite of all the sentiment that are going out even today, right? And of course, the sentiments have to change positive at some time, right? That's what it should be. We are still talking about, enterprises are still figuring out if they can get COLA waivers done, and they are pushing for that actively. I think what providers are gonna do, it has been last 2 years of uncertainty, so they are now gonna actively push for pricing increases, right? We are already seeing evidence of that happening. Of course, it's not to the level of 2022 where you could get a 6 to 10% increase just by the click of a hand, right? I mean, that's not how it is happening, but still providers are pushing for it. So our suggestion to our enterprise clients, to our enterprise audience today would be to lock in your pricing. And why are we saying that? Because just by having CPI included as part of contract, just by the wage inflation discussion that you may have, just by the margin discussion that you may have, because providers are going to come to you citing that doing or delivering a service will require you to increase the cost because the wages are increasing. All that kind of discussion which you had back in even in 2022, you may start having it again. Again, the magnitude of the quantum may not be the same, but definitely there'll be some increase. And long term, for a 3 to 5 year deal term, that will have an impact of 10 to 15%. This is the cumulative, not this year, but the 3 to 5 year horizon price increase. That is the pricing you can avoid if you lock in your pricing today, right? So that's a 3 year vision or a 5 year vision that enterprises will have to create for themselves. And that's something they should be doing. That's my suggestion to our enterprise clients. I mean, one of the things that happens in any area, IT, BPO, or engineering, right? And in this case, engineering is the skill premium. And I know that a lot of ways rate cards are structured. You have a single skill, and then providers come back to the enterprises and say, you know what, this is not relevant. The skill we didn't cover as part of rate card. Can you give some highlight into, how skill premium should be applied, and on top of the 10 to 15%, what are the additional value leakages that may happen in terms of skill premium?
Yeah. So, that's a good question, right? So if we move on to the next slide, what we see is a, clear distinction between the categories of skills, right? So what we have is tier 1, tier 2, and tier 3 skills. So tier 1 skills would be the commoditized skills. There's a lot of supply for this, subdued demand, right? So the price might not be quite high, right? If you were to talk about tier 3, new age skills, there's a shortage of talent, demand is on going to the roof, so there's a pricing premium, right? So it's important to know these skills, right? It's also important to know these skills by different segments, because each of these segments command a different price premium as well, right? So if you were to talk about a relative skill premium for each of these, firstly, within software and platform engineering, tier 3 skills such as full stack development, which requires knowledge of both front-end development skills, back-end development skills, right? Data analytics, new age programming such as Golang, they tend to command, higher premium as compared to recommoditized tier 1 skills such as Java, .NET, C++, right? Similarly, on products and systems engineering segment, skills such as Verilog, VHDL, which is used in semiconductor and hardware engineering, they tend to command premium pricing as compared to mechanical engineering skills such as AutoCAD, Autodesk Inventor, and standard hardware engineering skills such as FPGA design, right? So clearly, right, it is important to understand the right skill premium, as it is one of the critical areas. We often find situations where in a rate card there would be a wide range of skill premium that would be given, and it becomes difficult to track what's the right skill that needs to be given, right? So it is one of the key value leakages that we have seen in deals. Actually, in your experience, right, what are some of the prevalent contracting models that you are seeing,
and this goes back to the whole conversation we were having around reshoring, lock-in pricing, right? I mean, because ultimately, I think talking about outcome-based contract has been there for quite some time. The adoption has been really low. In fact, our research, our analysis of contracts actually suggests that hardly 3 to 4% of the conversation that start from an outcome-based standpoint, and I'm talking about business outcome, not engineering or IT here, right? Actually translated to an outcome-based contract, right? That's the number. 3 to 4% out of 100 conversations that start for an outcome-based contract. So that's a really low number. And that also kind of reflects in some shape and form in the next page, where we are talking about next gen models. We are talking about fixed fee and T&M. If you think about it, T&M today stands is the highest, most prevalent model within engineering services. Now, what happens because of that is it also puts a lot of service providers at risk to get benchmarked, right? Because it's easy to benchmark a rate card because there are comparables, right? Of course, there are normalization that need to take care of. There are service level stringency. There are 10 different parameters that you can normalize, but there's still a possibility to do it, right? And that puts the service provider rates on a lot of risk. We are seeing that, cloud and infra is where the maximum adoption of the output-based models happen. Application services is where a lot of hybrid contracts have come up, right? With respect to a mix of both traditional model like fixed fee plus T&M, covering almost like 70 to 80% of the contract, and then remaining 20 to 30% of the contract is linked to certain outcomes. And then the last one is engineering services, which we are discussing today, where we are talking about, outcome-based models should be the least prevalent among the 3 top segments. But within that, also we see a more hybrid way of doing things, right? Where we have the traditional model still covering for that 70 to 80% of the contract, and then the remaining 20 to 25% being done by the next gen model, right? And that's what it is. So this particular segment will be always be high for benchmarking, negotiations, And I think with the growth that we are seeing in the market, providers need to be really cautious about, how they're going about it. If we talk about the next one, here we talk about the complimentary offer, right? And this is the complimentary offer for senior leaders on the next page. So the senior leaders in any of the participating audience and the different firms that are there today, they can choose either of the options, right? Either you can do a price check for engineering services oriented roles that we have highlighted as part of the function and the 3 countries out of the 6 given countries, or you can ask for capability insights onto the different segments, pick your preferred engineering services segment, and the dimensions that we plan to cover as part of that will be scale of engineering workforce, partner ecosystem, in-house accelerators, and so on and so forth, right? So you can choose either of the two, and we'll come back to you, right? All right, let's go forward. We talked about the history. We talked about what we are seeing as a trend from a commercial standpoint. I think it's now time to talk about the future, right? How do we expect the market to shape up in 2024? And what can service providers do to improve the win rates in deals? So with that, we'll talk about the outlook and what can providers do about it, right? So on the next page, we talk about the outlook. So Nishant, we spoke about the historical performance. What do you think is the future of engineering services?
Yep. And Achint, I'll go back to the poll results that we saw earlier, right? We have a fairly smart audience today, apparently. More than 60% of them said that 2024 is going to be more of the same, right? Growth rates will be similar to 2023, and that's pretty much in line with what we are forecasting as well, right?
Audience is always smart, Nishant. Never doubt that.
Absolutely, yeah. So I think essentially, what we are saying is the broader macroeconomic headwinds that played out over the last year or 18 months, the slowdown in technology, telecom, BFS, some of these verticals. And what we're also seeing is some near-term headwinds, even in some of the fastest growing segments, let's say electric mobility or autonomous vehicles, right? All of these are expected to impact growth, at least in the first half of the year, right? So we are therefore forecasting 2024 to see growth rates of around 6 to 7%, right? There are, I spoke about some of the headwinds, even from a geography perspective, this starts playing out, right? North America is the largest market for engineering services. That region remains under a cloud. More recently, we've seen a recession in the UK and in Japan. So we expect all these factors to play out in the first half of the year, right? Now, the second half of the year, though, and of course, beyond that, is expected to be much better, right? We do expect the market to recover. Already, we are seeing some green shoots in the tech space. Telecom and 5G specifically will eventually become big, right? Over the next 18 months, 24 months, 5G will become big. So, the second half of the year should be better. And then starting 2025, Achint, I think, we'll go back to the normal double-digit growth rates that have been so very normal for this market.
All right, interesting, right? And Aman, what are your perspectives on the pricing front?
Yeah. So, if we move on to the next slide, so far we have talked about the historical trends, but this is, a forecast from our side, right? Based on multiple factors, right? What we anticipate is primarily, and, it also is in line with our audience thoughts as well, right? We anticipate an increase in rates in the latter half of this year as the market recovers, right? So the rise in rates is expected to be more for engineering services deals as compared to the traditional and BPO areas, driven by better growth areas and demand for engineering services, right? So that's something that we are forecasting. At a segment level, we expect a better increase for industrial and manufacturing operation kind of deals, right? So thinking about these involving smart factory setup, industry 4.0 use cases, right? We anticipate more demand for this. And that's where there's a higher price increase forecasted. And if you were to look at, products and systems engineering and software product engineering, relatively, we expect a lower price increase, right? Also, what we anticipate is that the increase is going to happen more at onshore locations. So, locations such as US, Germany, which are core markets for engineering services. We anticipate, more increase as compared to India, primarily because of the shortage of talent onshore, right? So, this is on the pricing front. Apart from pricing, we also anticipate some commercial changes that would happen on the ground, right? Apart from pricing, right? Which I would request Achin to cover in the next slide.
Of course, I'll go to that, right? But before going to it, again, for our audience, clearly you can see, price increases is going to be the sentiment even this year. So we don't anticipate any kind of decreases at all, right? Going back to even the poll that we discussed. Aman, if you look at this page, this is still an average, right? There will be segments of skill that will see higher growth. Of course, within the industrial and manufacturing operation, we'll have an industry 4.0 IoT kind of skill, which may be slightly higher than the stated ranges out here. So based on the skill premium slide that we were talking about earlier, where we talked about the tier 1, tier 2, and tier 3 skills and the combination of this outlook here, I think it's going to be very interesting from a pricing change standpoint. It's going to be really fluid, and we can expect, a lot of changes and a lot of scrutiny from the enterprises who are gonna, benchmark, who are gonna kind of try to get a feeling of where the market is from a pricing standpoint. Of course, the 5% outsource spend clearly alludes to the fact that there's a lot of potential, a lot of growth that is gonna happen. And as we see more enterprises outsourcing, we do expect more number of RFPs coming out of the market, more number of audits taking place, more number of those kind of activities also happening, right, simultaneously. So clearly an interesting space. On the next page, I'll talk about pricing is one aspect, but what about the other areas? What can engineering services providers do? So one thing is, a lot of we are in sensitive times with regards to economy. We still know that we are not out of the woods. That's a fact, right? So what can providers do is optimize your shoring and pyramid mix clearly, right? Because right now we are seeing a lot of those deliveries happening from onshore, particularly because the engineering services maturity towards the lower side. But clearly the deal shaping, the convictions with the enterprises have to happen, talking about, that the shoring and the pyramid need to be optimized a bit more. It needs to go in the same direction as we previously have seen for IT, infra or application services, right? We are also seeing that a lot of these engineering services are becoming end-to-end deal advisory, end-to-end consultative transformation, right? A lot of acquisition happened in the last 1 year where engineering services focused firms, consulting firms have been bought out by some of the larger players. And now a lot of those providers are trying to get into the end-to-end area. For example, we know of providers who are trying to get up into policy decision making, into setting up of and design of even battery parks for that matter. And then once they are part of the advisory and design phase of those battery parks, the policies, the design of those, they are also into the execution phase, which makes it a really big area for them to play in from an engineering service standpoint. We also believe that engineering services providers should be getting into more innovative commercial construct. Again, going back to the page where we were talking about the mix between T&M, fixed fee, and outcome and output-based model, the fact that engineering services as a segment has the highest exposure, right, to any kind of a benchmarking that may take place, it clearly suggests that providers, if they were planning to avoid all of it, they need to be more innovative with their commercial construct and create a win-win for their enterprises as well, not for just a win for themselves, but for their enterprise. And the fourth one is generative AI. Clearly, most potential on the software part of it, right? And that is where we are seeing for both production support, build, etc. But Nishan, any color you have, what's happening on the mechanical side of things or on the embedded side of things on generative AI? Are we seeing any major traction there?
I think there's a lot of interest from enterprises, right? A lot of them are investing to figure out what are the use cases, what can really drive value, right? And so far, what we've seen is, if you look at the product testing part of the value chain, that's where generative AI seems to have the greatest impact, right? So figuring out what are the use cases, Can we automate the execution of some of these test cases? I think that's where we are seeing a lot of impact. When it comes to product design, core product development, of course, in terms of writing code, similar to IT services or software product engineering, generative AI does have a role to play, right? But of course, on the more hardware or mechanical side, I think the applications so far have been limited to just testing. What I would say though is it's still early days, right? We are barely 1 year into exploring generative AI. I think 2024, 25 is going to be very, very different.
And Nishant, I mean, so what's happening on the IT side is we are still seeing some level of productivity commitment that has started going in. We are already seeing pen to the paper, at least on production support, at least on production development. Do we have any evidence? Have we seen that apart from software product where it's happening for sure? But apart from that, in other areas of engineering services like industrial and manufacturing operations, if there are any evidence of actually being contracted for, and at scale, of course, small POCs must be happening for sure.
Yeah, I think there are instances here and there, but I don't think it's happening at scale, right? I think that's the big opportunity for providers as well, right? People who can actually lead with that construct, because I'm pretty sure enterprises will start asking for this, 6 months, a year down the line.
All right, great. And Aman, would you like to talk about the one example of an outcome-based deal that we saw?
Sure. So I think it's also one of the questions that we had received, right? So, any new pricing models that we are seeing apart from FT based, right? And how are they integrated into contracts, right? So we'll talk about this through a case study, right? So if we move on to the next slide. This case study is about a leading manufacturing client, which had an existing contract with an engineering services provider to provide or build a connected IoT platform, right? So basically the client had approached us and they wanted to benchmark the outcome-based contract for commercial competitiveness and any potential improvements. So in this contract, primarily the contracting fee was partly fixed and partly outcome-based. The outcome component was basically linked to the increased adoption of the deployed IoT platform. So in terms of the solution, what we had done really is, we had benchmarked the contract against best-in-class outcome-based constructs that we see in the market. And we had, recommended missing SLAs and KPIs that were not part of the, right? So for example, SLAs or KPIs around variable payment on incremental revenue percentage growth, right? KPIs around employee experience index, right? So those were missing. That's those were some of the areas that we covered. Apart from that, we also looked at or redlined some of the key terms and conditions. Also, so just to give you an example, right? So the contract did not have a well-defined RACI metrics, right? So in the contract, it was mentioned that either the client or the service provider, can perform the UAT testing as per the defined test cases, and the client will approve the project after all the UAT test cases are passed. Now, typically, the UAT is being done, in typical contracts, UAT is typically being done by, the client, but it was not stated clearly here, right? So these were the assessments that we did, right?
And assessment, just correct me if I'm mistaken on this one. This was also a classical hybrid contract, right? Not just the entire contract is linked to certain outcomes, and it's classical. Give me a fixed fee, I'll have a 70-75% done on basis of deliverables or whatever it is, and then remaining 20-30% odd is linked to those variable payments and employee experience index.
Correct. Yeah. Okay. So also, I think so what the output was, it helped the client, the assessment helped the client in negotiating with the provider for best-in-class SLAs, performance commitments, and include key terms and conditions of contract that were earlier missing.
All right. Okay, I think we are done, right? We are through the content. It's time for Q&A. And what I'll do is I'll ask a few questions that have been asked in the chat, that have been shared with us. And, Nishant, okay, one of the questions was that what industry verticals are we seeing outsourcing tend to be strong in, and where activity they're outsourcing? Can you shine some light on this one?
Yeah, sure. And I think a very pertinent question, given that we were just talking about our outlook for 2024, right? I think here as well, we would expect more of the same. So 2023 saw growth being driven by the core ER&D verticals. So think of automotive and aerospace and industrial products. We would expect, more of the same. So it will be these verticals. Aerospace, for example, we've seen a significant rebound since the pandemic days, right? So there's a lot of spending going on there. In defense, because of what's happening around the world, we are seeing significant engineering spending and outsourcing. Automotive, with the whole transition towards software-defined vehicles, remains a key growth market. And even though there are some near-term headwinds around electric mobility, autonomous, but I think those will be short-term headwinds, right? So I think these would be some of the verticals that will drive growth. Life sciences and medical devices, I think, is another one that comes to mind, right? If you look at the Q4 performance of a lot of service providers, growth has been led by the life sciences and medical devices vertical. So I think these would be the top 3 or top 4 verticals that will drive growth.
Great. Thanks for that answer. The next one is one of the questions on pricing, and Aman, I'll ask you to chip in here. Okay, so there has always been talked about pricing models other than FT based, right? And we already gave one example of an outcome-based contract. Of course, it's all hybrid. We are not saying it's a purely outcome-based contract, but there are segments that are outcome-based. Again, if you talk about how are they integrated in the contract, shine some light on that.
Sure. So primarily, we see, at the outset, in engineering services deals, there are, outcome-based contracts that we see. But those are relatively, lower as compared to, the overall. I mean, if you were to look at some of the other models, right? But in terms of the integration, clearly, it's, one of the outcome-based models that we have heard is, use of royalty, right? So let's suppose if you are building a product, right? The providers will, often take royalty in terms of the revenue for the product sold, right? So that is one of the models that we have seen, how, providers bake in terms of outcome based, right? Also in terms of, the assessments, typically, as we mentioned earlier as well, right? So 70 to 80% is usually fixed fees. The remaining 20-30% is usually billed as outcomes, right? So that's the typical model that we've seen in the engineering services world. So there is an element of risk. There is also an element of upside that comes into the equation if you perform well. But yeah, these are some of the models that we've seen from an outcome-based perspective.
And I'll shine some more light, right? I mean, people can always go back to the older ways of having service credit penalties. That's classical engineering services outcome. They can have their SLAs, which are specific to the area, right? I mean, if you have it for semiconductors or if you have it for embedded systems, it can be similar. So thanks, Aman, for sharing that insight on pricing, models around how it can be integrated. I think we are at the top of the hour. We have a few more questions, but of course, we cannot respond to all of those right now. So we'll come back to you offline, right, on those questions that have been raised. And with that, I'll ask the panel I'll thank the panel for adding a lot of value today. It was a great discussion.